Hey traders, and welcome to Jackrabbit Trader. My name is Steve, and in this video we're going to take a look at the market and sectors for Saturday, November 23rd, 2019. So first things first, take a look at where we are in our market cycle. And again, if you guys are new here, definitely make sure to check out the e-course at the link below. But anytime we're above the 21-day exponential moving average, we are looking to be long stocks and aggressively add to our positions, and especially when we're over the 8 day. So on this chart, you can see that the 8 day is in white, the 21 day is in blue, and let me get a little bit brighter so you guys can see it. But you can see that the market really since back in early October has been trading above the 8 day moving average. This week we tested 3 times below it, ultimately closing higher on Friday. So this could just be one of those natural pullbacks to bring us back up to the upside, and we continue to make our way higher. So we're in a position where we still want to be adding risk, right? And may feel that this is not the time to do it, but based on our market cycle, we're still above these levels. Now, full disclosure, I will say that in my Jackrabbit Club, where we basically look at my real-time portfolio, I've been fully invested for some time now. So we want to start looking at, in that situation, maybe opportunities to take some profits. But if this is just, your first go at it, I would say tread lightly, right? We're on an extended move. We're still trending higher, but the point of this market cycle is really just to keep us on the right side of the trade. And right now, the right side of the trade is to stay long the market for as long as we can. And when we start breaking these moving averages, then we'll look at it a little differently. From a technical perspective, we had a breakout in the SPY 3 or 4 weeks ago, and now this is the first week where we got a close that was lower than the open with this red candle. So another cause, just a little concern, maybe a little pause here in the market, and honestly it needs a little bit of rest to reset. And we've talked about this upward channel here coming in, maybe testing the top of the channel, and again, depending on how you draw your trend lines, we could obviously tweak this however we need to, but maybe we already hit that channel, right? If you look at something like that, maybe we already came to the top of the channel, hit some resistance, just like we did here. We may get a small, shallow pullback, try and get a little bit higher, hit it again, and then ultimately pull back. So, again, for me, I think going into the end of the year, we've had a great year. It's been a good year. The last few weeks have been quite strong. So this is probably not the time I want to be looking to really place, major bets here. I think we're at the point where let's enjoy the risk or enjoy the profits from the risk we've put on over the last 3 or 4 weeks, and start to take some of those positions off, and see where this market goes. But again, hard to fight this market, right? Obviously going straight up. Let's look at the Qs, go back to the weekly. Okay, so there's the breakout in the SPY. The Qs, similar situation, right? You had the breakout, 3 weeks of upside, a little bit of a pause here, right? Not surprising. The diamonds, same situation, right? You had 2 weeks of a upside breakout, a little bit of a pause, and the big one on the, that we're still trying to figure out is this IWM. And I'll tell you, if the IWM can figure it out and maybe start breaking higher, this market may get another set of legs, a second wind, with some of the small caps, taking the lead and letting the large caps rest. Maybe just a little rotation. So again, based on our process, we want to still be long the market. We're not trying to pick a top or anything like that, but just knowing where we are and how extended we are without very little pause over or under the 8 day, right? We do get these opportunities. It happened back here in January, and then you get a quick pullback. But, this thing can run. Look at what it did in January. This is where we picked up most of the performance in the SPY, coming into the end of the year of 2019 or 2018. Market was down. January picked up, and then we got a good bit of performance, for the year right in the beginning of January, going from, let's see, where's the 1st of January? It's right here. Going from, say, the 250 up to the 294 area, right? And then we had a pullback, move higher. All right, so this is what we're trying to look for. We're looking for these periods, these green market cycle periods, where we feel that the wind is at our back per se, and we want to be taking advantage of that. And during the red market cycles, when the stock market is trading below the 8 and the 21-day exponential moving averages, those are the times where we want to play defense. We want to make sure we protect the profits that we've made in the previous cycle. And, as I said, not trying to pick a top, but this is starting to look extended to me. Obviously going into a very strong period of the year, but seems to me as though we need some significant rest here to maintain these levels ultimately going through the end of the year. So I'll be trading that way accordingly in my accounts and in the Jackrabbit Club. But obviously you guys need to do what you feel is best for your process. Let's take a look at the sectors. Okay, sectors. You can see this week, again, sorting by the first column, we were looking at the 7-day performance. Second column, looking at the 30-day performance. We put the SPY in there just so you can gauge, where you're at, where those sectors are at in relation to the SPY. But you can see the XLV, right? XLV up 3%, 9.25 for the last 30 days, and this thing's on a tear, right? A lot of our names in the healthcare industry are really performing well. The XLF, all right, hitting a bit of a pause here at a previous resistance level, right, between 29 and 30. Okay, some resistance in there from previous highs earlier in the year. And the XLU, all right, XLU coming back strong the last week, and now here we are, previous support, right, of this consolidation becomes resistance. So now does the XLU roll back over? Again, you could always look at these as trades if you were to trade these. If the XLU, in my opinion, goes back below 62.44, you use the swing high from this week around 63.50 and see how long it'll run to the downside. But we don't really trade that way here, but I always like to look at the sectors and see how they're reacting, right, and how you could trade them just as any other stock. XLI, holding those levels, that breakout level. The XLE, all right, still looks to me to be the weakest of the 9 sectors. XLP tried to break out this week, right? Staples trying to get a little bit of a move higher, still in this consolidation. XLK finally taking a pause after, again, a 3 or 4 week, just like the Qs. The XLY looks like maybe it wants to roll over a little bit. And the XLB materials just stuck in this larger range below 61. All right, so again, we did finish nicely higher on Friday, all right, and I just can't stress it enough. I think there's times where you just need to be a little bit more cautious, and even though we're not below the 8-day moving average right now, I think we just need to be a little cautious here, right, going into Thanksgiving week. And it is what it is. I mean, we can't forget about where we've come from, and I think just going forward, going into the holiday week, it's not the time to be a hero, is basically what I'm trying to say in a nice way. I think that time has passed, and again, we really, in my opinion, the longer that we can stay between maybe 310 or 308 and 312, and maybe just chop around in here and let these moving averages catch up and build a nice base and then break out, I'd feel a lot better. But this grind higher at some point has to come to an end, and you can see that this week, there was 3 opportunities where this was below the 8-day moving average. And for me, after a run like this, when we get below and close below the 8-day moving average, I'm going to turn around and start taking some profits pretty heavily, because I know how quickly those moves below the 8-day can fail. All right, and then all of a sudden you're giving back half of your profits. So going forward, I think you want to concentrate on the XLV, XLF, and maybe even the XLU. But you can see a lot of these sectors are starting to underperform. And honestly, we're not going to have a trades video this week because there are none. All right, a lot of stocks are extended, and that to me tells me, you know what, it's time to take a step back, time to take the foot off the gas for a little bit, and let this market kind of figure out where it wants to go, And as I said, in my portfolios, I'm going to definitely look to tighten up some stops and probably take some profits this week. So if you're not a member, I highly recommend checking out the Jackrabbit Club. Head over to jackrabbittrader.com/membership. You can check out the information and sign up. And if you are a member, check out our next video. Other than that, have a great rest of the week, and we'll catch you. And a happy Thanksgiving for everybody in the U.S. And we'll catch you in the next one. All right, take care.